We finally done it. The bear market is over. Well, at least that's what traders have been saying all week. So before we hop on, our high horse, do a victory lap, we're going to break down some reasons as to why that might or might not be true in this video. So without further ado, let's hop over to TradingView. Mostly our discussion will stem from the higher time frame because with any chart-based video, if they're not started on the higher time frame, you're missing out, honestly. There's majority of the analysis that we're going to do for pretty much any trade is going to come from these higher time frames. So looking at this, what has been the main concern? Well, I mean, there's been a lot of macro news developments. We've had tariff talk. We've had all this stuff going on. This is the driver. That's driving uncertainty. People sell fear. They buy euphoria, right? So when things are very uncertain, things will tend to drop very rapidly. And because of the function of human emotions on the market, the fact that people have fear, the fact that people sell when they're scared, it's a continuous feedback loop. So those types of things will drive price much further than you could possibly ever imagine. You would say, how is this even worth that? Right? You look at some of these, big Fortune 500 companies. How is it even worth that price? Well, that's where the opportunity lies. So looking at this chart, what do we see? First and foremost, we ran through a lot of these daily lows that we've had pretty much accumulating for the majority of 2025 so far. So this range right here, very choppy, right? But we had left a lot of these lows untapped. The news drove it lower and we cleaned up all that down there. Now, what does that mean to you? Well, first, it means we can't necessarily just buy the first test of anything. I mean, if that's the level of your analysis, you're going to struggle. If that's as deep as you go, you'll struggle. And, we did have some people try to buy there. We did attempt some trades here. But you have to kind of consider how is the overall structure developing in a way that will benefit a short-term trade. Because just buying a level really won't do much for you. Price can touch any level. This could go 200 points lower, like it pretty much did. It doesn't guarantee that there's going to be a bounce. The only thing is that we know is that these are where area, like if you look at swing highs, swing lows, these are areas where price tends to react. The question is, where do we identify those reactions and those reversals? Well, it comes from what I would consider market structure, and that would be anything under a daily chart. So you have like daily, weekly, those are mostly narrative, direction, long-term picture, they give you the levels. But for the market structure, the meat and potatoes of what we're actually doing every day, we're looking at hourly charts, we're looking at 30-minute charts, maybe 4-hour at the highest, right? What do we see kind of developing? So we can start to chart out some levels. Obviously, as for last week, this was a huge level, right? And we saw that there was an initial bounce, but this bounce isn't really that animated, if we're being honest. I've seen much better. So when we first test the level, we close near the lows. The next day we sweep below the prior day low and rebid. And I want to point something out because this stuff, it's pretty measured, right? This isn't something that I'm just making up on the fly. When you see some type of retracement following a broad candle, if it stays below the 50% of that candle body range, it's still valid as a downtrend. That's a retracement. Let me repeat that. If it stays within the bottom 50%, that's just a retracement. Now, what do we get here? Well, that's a new week gap. We rally up. What do we test here? We'll have to check, see if there's some levels that correspond. But this initial bounce didn't really do too much damage to the downside, right? That is a very, very minimal wick. When we get into today's trading, we can kind of see that this dynamic has changed a little bit. But let's kind of walk through the week. So we had obviously one level right here, and then we'll go ahead and clean this up a bit right here. So this teal line right here, that's going to be our bearish continuation level. So we saw that we stayed under there, right? We rallied up to that point, pretty much to the tick, and then we gapped above on the new week. So this level is one of our, liquidity points, if you will. It's where you'd find a lot of long-term holders having stop losses. It's just a basic logic. You put your stop under a swing or above a swing. It's a mechanical way of trading. Regardless of time frame, that's a consistent trait that humans will have. So we see that we pretty much end the Friday like pretty much on the money. like right there on that 50% of the prior daily candle. We gap up, create a little bit of a new week opening gap. And if you're not familiar with the concept, get familiar. This stuff is very, very, very powerful. So when you have a gap like that, right, this gap in itself provides support or resistance depending on your proximity and orientation to the level. So with those things in mind, we saw that this thing reject out of the gap at the New York Open around lunchtime. And then we get into today where we ran out the prior day low, and now we're sweeping down here, right? Running out this low again. And it's not until we start to see this afternoon strength. This is where I would consider there to be a potential change in the state of delivery, meaning price is not as willing to go lower. Does that mean we're done selling? Who knows? It really depends on the close. In my opinion, it depends on how this daily candle closes. But what do I see right here initially? I'm looking at this series of down close candles. So if we want to go ahead and annotate this, I'm looking specifically here. What defines a trend? When you're going down, you have a retracement, and you go down, retracement. These periods where you're going up are going to be the opposite candle. I mean, I hope that logic makes sense. So when you start going down, right, this is the primary direction, and then you flip this level, you're flipping that swing high. And when you could do it on a closing basis, like we're seeing right here with this, we close above, even if we dig in a little bit, it's still relatively valid as a potential reversal pattern. I mean, this isn't anything new. It's just a better, more simplified way of looking at it. But what am I drawing? It's a head and shoulders, right? A change in the state of delivery is a head and shoulders, just with more context and in a simpler, more precise way, right? You're not just, not everything's a head, not everything's a shoulder, right? You have to have an understanding of where these things might form in the market. So what do we get right here? Well, this is a pretty big move. We're talking, from like 300s to 6. Not bad. Not bad for an afternoon. What do we see on the lower time frame? Do we see any sort of structure that is tradable? I do. I mean, I took a couple longs in here. I got a long from pretty much right here to right here. From like this area to this area. And then I also got a secondary long in this region right here to pretty much the swing high. So those are the two primary trades. I did try some stuff in the morning. Mixed efficacy, caught a long here as well. So there was some opportunities, but it wasn't until we got to about right here that I realized price to be changing its orientation for the day. There's a few levels intraday that I really like to focus on, and I'll go ahead and share with you guys right now if you're not familiar. You want to be looking 100% every single day. You want to be looking at the 9:30 open. I find that to be a very valuable level. That opening price, right? So you have 9:30 right here. Boom. That opening price, when you flip this opening price, super important. Like, are you kidding me? You have to recognize that for the RTH, when you're opening the regular trading hours, that is anything below, it's going to be a wick potentially. Or if it's going, downward, anything above, it's going to be a wick for that RTH session. So if you're dipping below, this is where you can accumulate, and that's where you can kind of distribute higher. So 9:30 open, definitely be focusing on that. We're also, because of the type of session we're in, we definitely want to pay attention to VWAP because these are very volatile sessions. And when price and volatility or volume are both like seeing an increase in, whether it's you're seeing increase in price movement or an increase in volume overall, there's a greater correlation with VWAP. You're not just going to kind of whip through it haphazardly. It's going to respect it, especially when you're seeing one of these. So you get this movement below and then this flip. This right here is showing a change. Obviously, yeah, you get a flip right here. That's a market structure shift and a higher low. That's great. But when you get it associated with a key level, like we're talking about right here, this 9:30 open, and then you get some sort of price pattern in there, along with VWAP, now you're really talking. So with regards to opening prices, there is one last opening price that I will go ahead and share with you guys right now. And that's going to be the midnight open. I'm not sure if I've discussed this in a previous video, but the midnight open is also a very significant level to me because I have the experience and just the data overall, I would say, to see that this level more often than not can act as some sort of resistance, or pivot point, it can be very influential on price. I see this level, like I kid you not, there's times where it'll run right to this price level and then reject, like to the tick. And it's something that I'm always aware of, whether or not you have the personal experience to see that this stuff is valuable. I've experienced enough of the, you know, it working against me to realize like I need to at least be aware of it. So these are things that are always on my chart. You have midnight open, 9:30 open, because like for me, this is how I use it. If I'm long right here and I'm holding for new high a day, I'm taking something off at midnight open, 100%. But the reason why midnight open matters is because, well, that's where Asia's ending and you're going into London. If you really look, it's actually a really interesting example. Right at midnight, massive volatility came into the market. Why did that happen? I honestly have no idea. But you see right here, massive volatility. So this right here, out of nowhere too, it's just like kind of chopping around. You don't see anything like this. And it's a massive, massive, massive wick. So with that being said, that price level is super important to me, regardless of, you know, methodology. I will always pay attention to that. That's something that like, it doesn't benefit me to ignore. It's just one line on my chart. Gives me an area to exit. And the reason why that matters is because when you're thinking in terms of the structure of a daily candle, right? You have open, high, low, close, whatever, and then potential wicks. If you're thinking in terms of like the, you know, the true candle open, you know, the 6 Eastern, then yeah, you can look at that. Anything below creates the wick, anything above creates the body. In this scenario, you can also use that same logic for the midnight open as well, because, you know, obviously the Eastern one, it has potential for a gap. So you could be looking at that in terms of the new day gap or new week gap. So I separate the two. I don't focus on the you know, the true candle open as the inflection point. That's going to be midnight open. So with all that being said, where are we at now? Well, it appears we are, you know, in PM session, we're poised to close near the highs. With that being said, yeah, this hammer is going to be indicative of a potential reversal, right? The idea would be you would want to see continuation through the prior day high. I think that's a pretty basic logic for any trading system, but you want to see continuation through the prior day high. So if this thing can close, specifically, I'd like it to close above here, right? Then we could potentially see a run into this previous candle range. So same thing we did with the other way, you know, the other candle on you know, right here. We could look at this right here as well. We'd want to see this get above that. But aside from using candle measurements, you can also use something like the 60-minute chart. And obviously we have a couple levels. So I'm going to look at this hourly chart right here because I think this provides a pretty clear framework for what we want to be engaging with. So you have sequential sweeps lower. Yeah. And then you have a potential change in state right here. So realistically, we'd be targeting something, you know, in this area, maybe the 900 to 21,200 at some point. But yeah, I'd look for a continuation, potentially just holding this area, right? You would not want to see this given back too much. Let's see right here. Boom. So yeah, something in this area to hold as a bottom. So this idea right here, this is a liquidity sweep. Obviously, there's a million different ways you can look at it. But what's happening is price is dipping lower, and you get this little slingshot effect, right? It dips lower, and then it flips really quickly and abruptly. And people who don't realize that this is flipping at a key higher time frame level, they get caught trying to short this whole thing the way up. Like all the way up here, they're trying to short, which is jet fuel for longs. That's why these moves right here, specifically down here, these tend to be super powerful because you get people caught off sides. Same thing goes, you know, obviously when it's flipping from long to short, but in this scenario from short to long, you can expect some short covering potentially, right? Let's watch how it closes. But if you got something out of today's video, leave a like, comment, share. And if you need anything, you know where to find me. Links above. Check the description. Take care. Peace.